The financial advising industry has a wide and confusing array of compensation models. If you watched my last video on financial advisor compensation where I talked about fee-based and fee-only advisors, you'll remember me saying how opaque the cost structure is in this industry. Well, a rising number of advisors are offering their services now for a flat fee as opposed to legacy pricing models. And the flat fee model is an attempt to take on the traditional advisor by making fees simpler and more transparent. In the traditional financial advisor fee structure, as your net worth goes up, you end up paying more to your advisor. In some cases, it can be justified. More money and more accounts of varying types may mean more complexity when you're managing your financial situation. But in many cases, just because your account values are increasing doesn't actually mean that your situation is increasing in complexity. Maybe you're looking for an advisor and maybe you're not, but you're just interested to learn more about how the industry works. In either scenario, this video is for you if you want to understand how financial advisors operate, the services they offer, and how flat fees are calculated. Now, if you're a bit deeper into your research about financial advisors, or you're closer to retirement and you need to actually make a decision about your own financial advisor needs, I've recorded a free masterclass training video that will teach you how to qualify an advisor, as well as what strategies top advisors are using with their clients, and the right questions for you to ask that advisor when interviewing them. You can watch the free training by going to app.thepeakfp.com/free training. Okay, so let's begin today's video by explaining what a flat fee advisor actually is. The term flat fee specifically refers to the method that the advisor charges for their service. A flat fee is one predetermined annual fee covering everything that the financial advisor will be doing on your behalf. It could be billed annually, it could be billed quarterly or even monthly, but it doesn't fluctuate over that 1-year period as it would under the AUM model. So how is the actual fee amount determined? Well, usually it's based on a number of factors, including some of the following: the scope of your retirement planning responsibilities, the amount and account types and locations of the assets that the advisor will manage on your behalf, your meeting frequency and complexity, and the overall financial plan complexity. In most cases, the fee amount is going to be recalculated each year to account for any material changes to the scope of work. Another area of increasing popularity and value to clients is that their financial advisor be a fiduciary. And because flat fee advisors are only ever paid by the one annual fee directly from you, the client, they are considered fiduciaries. And many advisors that charge a flat fee will also be financial planners. They'll make their own comprehensive financial plan the cornerstone of your working agreement together. Now, a couple other things to know about flat fee advisors before we get into the real nitty-gritty of what it actually costs for this type of service. You should know that the financial plan is going to determine the recommendations and actions that the advisor is going to share with you. And because flat fee advisors don't charge for assets under management or AUM fees, they might not directly manage your investment accounts. If they do offer account management services, it could result in a higher fee, which in early years when account values are lower, might actually be more expensive to you than AUM fees. But over the years, as account values grow, it's likely the case that a flat fee structure will favor you, the client, when compared to what you might pay under an assets under management approach. Let's take a quick pause here before jumping to dollars and cents. If you're watching this video, especially this far in, it's probably the case that you actually need help with your retirement planning. So here at Peak Financial Planning, we are fiduciary fee-only financial advisors with a comprehensive financial planning approach. We offer a flat fee payment structure for those of you that are interested in that model. If you want to learn more about how working with a financial advisor who focuses on comprehensive planning can help you increase your retirement income and avoid running out of money in retirement, you can go watch my free masterclass training video at app.thepeakfp.com/free training. You can also find a link to the training video in the description and comment sections below. All right, so let's move on by talking about the services that flat fee advisors will usually cover. Well, it's usually case by case. Any of the services from this list are usually available: comprehensive financial planning, management of retirement accounts, retirement savings strategies, cash flow management strategies, Social Security and Medicare election strategies, investment management and investment selection, setting and tracking financial goals, as well as many additional services. Just as with the traditional financial advisors, flat fee advisors may specialize in certain areas of financial advice or financial planning, so you'll want to make sure you ask the advisor in question what their areas of expertise are. You're going to want to know if they have to refer out for parts of your financial plan or whether they can take care of everything in-house. Finally, let's talk dollars. What should you expect financial advice to cost, and how do you compare that across the different methods that advisors charge? Because there's really no standard way that all advisors charge, arriving at an average dollar amount is actually really difficult. But to set your expectations, flat fee advisors will typically charge somewhere between $2,000 and $10,000 per year. The lower the fee, the less complex the project, and vice versa. Outside of the flat fee space, advisors charge in the following ways. The first is assets under management, or AUM. Assets under management fees across the industry range from 0.25% to as high as 2% of the AUM. In exchange for that, you'll receive investment management services and occasionally some financial planning or advice. But more often than not, under an AUM approach, you'll be limited to just investment management without planning services. Also, many advisors who work in that framework have asset minimums, meaning they don't take clients with less than a certain value. The second method is commission-based. I've done a whole video explaining how commission or fee-based advisors work, and you can go watch that for more details using this button. But the quick summary is that to this day, many advisors still get paid via commissions based upon the products they sell to you, although this is quickly going out of fashion. And estimating the cost of commissions is actually really difficult. It's not transparent, it's pretty opaque. It's usually not until you actually have a contract for the investment product in front of you and can read the fine print that you'll actually know what it's going to cost you. Now, most traditional advisors' responsibility ends to you upon your purchase of the annuity or insurance product if they're in the commission model, and the responsibility for future customer service falls upon the insurance company from that point forward. The third method of payment or fee structure is retainer for services, which refers to a set monthly or annual fee. Usually, it's another form of the flat fee model, where a portion of the fee is paid upfront as a retainer, with the balance being paid in quarterly or monthly installments. And the cost is usually unrelated to how much money you have available to invest, but can increase based on the complexity of your situation. And like the flat fee model, retainer services typically cost between $2,000 and $10,000 per year. In return, you're going to receive comprehensive financial planning services, assistance with implementation, and ongoing monitoring and adjusting. The fourth method is hourly rate. Some financial advisors, such as those in the Garrett Planning Network, charge an hourly rate similar to an attorney or accountant. The rate usually is somewhere between $200 and $500 per hour. Now, this structure is useful if you don't need ongoing relationship but have one-off questions that need answering, things like saving for college, setting up self-employed retirement accounts, or setting up a budget. And last but not least, we have the flat fee per plan method of cost structure. Occasionally, an advisor charges a flat fee for an individual plan that doesn't include any implementation, ongoing management, or oversight, and the cost usually ranges between $1,000 and $3,000. This can sometimes be known as project-based planning, and you'll receive the plan but be expected to carry out and execute all the implementation on your own. It's likely to be the cheapest method to obtain a financial plan, but you'll have to do all the work on your own, and there can be risk of error when you do that. So to wrap up here, let's quickly touch base on why financial fee structures should be important to you as a client. Obviously, the way financial advisors get paid affects the quality of their recommendations and their advice to you, the investor. So in order to make the best decision regarding which advisor to hire for your needs, you need to understand how they're paid and what services they specialize in. If your situation is simple, you're young and mostly saving automated via a 401k at work or an employer-sponsored plan, maybe project-based planning makes the most sense to you. But if you're self-employed or a freelancer or a contractor, you have to manage everything on your own, it might make more sense to work on a retainer or AUM basis because the cost might be better for you. Finally, if you're nearing retirement or in retirement, it almost always makes sense to work with a flat fee or fee-only advisor because you'll need to make critical decisions such as how to draw income from your investments, understand the tax consequences of your decisions, as well as things like Social Security and Medicare. And so one last reminder, if you are 8 to 10 years before retirement or in retirement currently, I highly encourage you to watch my free masterclass training video at app.thepeakfp.com/free training. I hope you found this video helpful, and I'm looking forward to seeing you in the next one.